the introduction is distributed ledger technology is a digital system that securities record, share, and synchronize data across multiple nodes without request a central authority, with blockchain being a proven example. In banking, DLT excellence transaction processing reduce cost, chances, security support, automatic regulatory compliance, and promote finance inclusive by providing service to underserved area. Key applications include real-time payments, settlement, secure international transaction, efficient KYC process, and transparent loan management. DLT also enables smart contracts and support digital currency like CBDC. However, it adopts face major challenges such as incompatibility between DLT platform, learn of industry-wide standard, and difficulties in adhering to diverse international regulation. Overcoming the barrier is essential to unlock DLT full potential in transforming the global financial system into a more efficient, secure, and efficient ecosystem.
So for the problem analysis, here is a breakdown of the challenges and consideration for distributed ledger technology in the banking sector. So the first one, we have data consistency and network stability. So the challenges are ensuring consistent transaction data across all network nodes, variation in processing times and network disturbance, and then we have temporary ledger discrepancies causing operational concern. So for the impact, we have the financial errors, which is we loss of our customer trust. And then next, we have regulatory challenges. In here, we have ambiguity in regulation, and then we have evolving and unclear compliance standards, jurisdictional inconsistencies, creating operational challenges, and then we have legal consequences for non-compliance. So here, for the impact, we have reputational damage, which is it's uncertainty in decision-making processes. And then next, we have integration with legacy system. The challenges are legacy systems are costly and difficult to integrate with DLT, and it's also lack of standardization in DLT protocols. So the impacts are increased complexity and inefficiency, and then we have delayed adoption of the technology. And then number four, we have security concerns. For this security concern, the challenges are decentralized architecture introducing new vulnerabilities, and then we have cyber attack on weak points in the network. So for the impact, we have financial losses, which is the data breaches eroding client trust. And then number five, we have lack of standardization. So for the challenges are fragmented approaches to DLT implementation, and then it's difficulty ensuring interoperability across institution. So the impact are collaboration inefficiency, and then delays in widespread DLT adoption. And then last but not least, we have interconnected complexity in banking. So for the challenges, integration impact other areas, which is like compliance, security, and then next we have rapid technological advances outpacing regulatory updates. And then the impacts are unclear direction on best practice, and it's also heightened risk of operational disruption. So for the theoretical framework, the first one, we have consensus algorithms in distributed system. The purpose is to ensure nodes agree on data values or choices. And then the role in blockchain is to maintain ledger consistency, prevent issues like double spending. So for the example of consensus mechanism are proof of work, which is its miners solve puzzles to validate blocks. And then we have proof of stake, which is validated based on stake cryptocurrency. And then lastly, we have practical Byzantine fault tolerance, which agreement despite not faults. And then the second one is core principle of blockchain technology. For the decentralization, there's no single point of control. Immutability, transaction cannot be altered after recording. And then for the transparency, all transaction visible to relevant parties. So application in banking is to secure and transparent transaction, and it's also enhanced trust through tamper-proof records. And then lastly, we have consistency models in distributed system. There are two types. The first one is strong consistency, which is real-time synchronization. Every read reflects the latest write. And then we have eventual consistency, which is its updates propagate over time, achieving final agreement. And then we have banking relevance, which is to maintain accurate account balance and to prevent data discrepancies. So for the challenges in DLT implementation for banks, firstly we have regulatory compliance. It's evolving and unclear regulations. Blockchain's transparency helps meet audit requirements. And then we have compatibility with legacy system. Its integration with existing infrastructures is difficult. And then it's requires seamless operation with minimal disruption. And then we have security concerns is to addressing vulnerability in decentralized system. So it's preventing fraud and unauthorized access using blockchain features. And then number 5, we have role of distributed system theory. So for the key contributions, framework for fault tolerance and resource management, effective communication protocols between nodes, application in banking is to smooth integration of DLT with legacy system, and then we have to enhance operational resilience and reliability. And then lastly, we have strategy benefits for bank is to data consistency, to reduce risk of inaccuracies through consensus mechanism, and then is to improve our system, reinforce system against future threat, and then we have operational threat, update infrastructure without major disruption, and then last but not least, we have regulatory transparency, which is to immutable record support compliance and also audit.
Solution 1. Efficient Transaction Management System. What are ACID property? ACID stand for Atomicity, Consistency, Isolation, and Durability. This property help ensure that transactions in database are reliable and accurate. First one, atomicity. Transactions are all or nothing. If something goes wrong, everything is rolled back. For example, when transferring money at the bot account are updated or none at all. Second, consistency. Transaction must follow rule to keep the database valid. If the transaction tries to create a duplicate entry, it will be rejected. Third is isolation. Transactions happening at the same time don't affect each other. Change made by one transaction are hidden from other until it complete. The last one is durability. Once a transaction is complete, it stays that way, even if their system fail. This ensures that important data is lost. What ACID is important in distributed system? Implementing ACID properties in distributed system can be challenging, but is central for maintaining data consistency. Here how? First is coordination across nodes. Second is failure handling. Third, developing agility. The last one is trade-off with CAP DROM. Addressing key challenges, organization face challenges with data consistency, regulatory complements, and security when using advanced transaction management system. Here how ACID help. First, data consistency issue. Second, regulatory complements. Third is security vulnerabilities. Solution 2. What is middleware? Middleware is software that help different systems communicate and work together, especially in banking. Key function of middleware is data transaction, protocol bridging, API management, security and compliance, and the last one is integration with legacy system. Interoperability framework for legacy system, we have key components of middleware, which is API gateway, data integration tools, and business logic layer. Next, we have benefit of using middleware, which is increase efficient, consistent data, support fintech partnership. The last one is cost-effective scalability. Last point, we have addressing challenge, which is legacy system limitation, regulatory compliance, and enhanced security.
For solution 3, regulatory compliance framework development. First, understand and apply anti-money laundering (AML), know your customer, KYC, and data protection laws. Conduct risk assessment for transaction and customer profiles. Next, company also can use automated tools to monitor compliance activities, such as automated transaction monitoring systems, which can quickly identify suspicious activities, and train staff regularly on updated compliance practices. For solution 4, advanced security measures. Company can use AI systems to detect and prevent cyber threats that allowing quick detection of threats before they become major breaches. Next, companies should incorporate multi-factor authentication (MFA) measures to ensure users provide various forms of verification before accessing sensitive data or making transactions. This additional security measure greatly decreases the risk of unauthorized entry and improves overall system reliability. Encryption methods are necessary to safeguard confidential financial information both during transfer and storage to prevent unauthorized access. And lastly, companies should perform regularly security checks and train employees on best practice.
So for the evaluation, the first one, we have efficient transaction management system. The key features are the scalability, fault tolerance, efficiencies, but the challenges are its high implementation and maintenance costs. It also requires careful planning to avoid inefficiencies. And then next, we have interoperability framework for legacy system. The purpose is to gradual integration of legacy and modern solution. It also enables scaling operation without overhauling infrastructures. And the benefits are, for the fault tolerance, we have legacy system remain operational during failures. We have for the efficiency, it supports seamless data exchange and incremental upgrades. But the challenges is its initial inefficiencies due to complexity of integration, and its long-term benefits outweigh short-term difficulties. And the third one, we have regulatory compliance framework. It adapts to evolving regulatory landscape. It's scalable and fault tolerance to match banking operation. It enables seamless updates without business disruption. So the benefits are simplifies reporting and audit processes. It's avoid penalties for non-compliance. It's also enhance operational efficiency over time. But the challenges are high initial development cost. And then lastly, we have advanced cybersecurity measures. For the scalability, it's adapt to expanding banking operation and emerging threat. For the fault tolerance, it's redundancy and incident response strategies. It's also quick recovery from breaches without service disruption. For the efficiency, it's automate threat detection for optimized protection. But for the challenges, its security measures can add system overhead and affect performance. It's also balance required between security and operational efficiency. So for the goal, it's integrated security approach to support growth and ensure seamless customer experience. So for this case study, we use JP Morgan Chase use of distributed ledger technology. The technology used is Quorum, which is permission blockchain. The goal is to increase transaction efficiency, protect sensitive financial data. So here's are the features of Quorum. It's transparency among parties with private transaction support, integrated governance for regulatory compliance. It's also compatibility with legacy system. And then next, for the application in banking operation, there are trade finance and payment settlements. It's faster processing using smart contracts. It's also reduced transaction time from days to minutes. And for the efficiency gains, it's streamlined interbank transaction and it's also enhanced operational performance. So, for the benefits of JP Morgan's DLT approach, improve consistency. It's ensure data accuracy across the network. And for the regulatory compliance, it's integrate features to meet legal requirements. And for the seamless integration, it's compatible with existing system for easier adoption. And then, lastly, we have broader implication for DLT in banking. So, the proposed solution is to efficient transaction management system, its interoperability framework for legacy system, and its robust regulatory compliance framework. And it's also advanced cybersecurity measures. So for the case study value, JP Morgan Chase served as a model for addressing DLT challenges. It also highlights the practical benefits for financial institutions.
In conclusion, distributed ledger technology (DLT) offers transformative benefits for banking, including enhanced security, transparency, and efficiency. It supports instant settlements, simplifies KYC processes, and promotes financial inclusion. However, challenges like interoperability, inconsistent standards, and unclear regulations hinder adoption. To fully harness DLT potential, research should focus on creating unified protocols, harmonizing global regulations, and exploring its social and economic impacts, particularly in undeserved regions. Overcoming these barriers can drive a secure, inclusive global financial system.